This is going to be a quick little blog today for March 11th, 2013 to show our software in action. There's literally hundreds of ways to trade using our tools, but one of the easiest ways of trading is now using our currency indexes. For the last 6 or 7 years, we've actually statistically compared every currency to every other one and shown you in usually histogram form which one's strongest, or you can see right here 11 o'clock weakest. These trends tend to continue, and when they do, you're likely to make 2 to 3 times more if the trade works than what you lose when they fail. And that's the key to trading. Small losses, big wins, and hopefully you're also over 50% winning as well. Using the currency indexes, you can actually see what's going on in the dollar, the yen, the pound, the euro, and obviously 4 other ones I'm not showing: the CAD, Australian, New Zealand, and Swiss. So basically, in a nutshell, all you do is find one that's weak and trade it against the strongest one. You can see here the dollar has a daily, weekly, monthly trend that's up, but you can clearly see a double top here in the pattern. It's right near the previous day's low, and when it breaks down underneath that low, that's a trend that's very likely to continue because there's no signs of strength before, and breaking down underneath the previous day's low is a sign of weakness. So at 11 o'clock, you'd want to find one that's the strongest. The euro is trading in a very tight range, and at 11 o'clock it's underneath its hourly. The pound is underneath its hourly, as is the yen. Let's take a look at some of the other pairs. The CAD, 11 o'clock, it's just breaking from above to below its hourly. The Australian clearly is one of the strongest ones. It's been above its hourly all day. It's above the previous day's high right here, which is the dotted green line. And you can see at 11 o'clock, this is right up near the highs, likely to continue. And so one of the highest probability trades at 11 o'clock would be to trade the strong Australian versus weak dollar. And basically you want to look for buys in the Australian dollar. When one currency is strong and the other one's weak, you're likely to make 20 to 50 pips. So let's take a look at this one, see how many pips it made. Here's 11 o'clock. You can see this currency broke out just before 11 o'clock of its high for the day. And you go in that trade right here, somewhere around 0243 to 45. And you can see it went all the way up to 77. Nice 37 pip move. And obviously you can draw your fibs off that previous swing. This is kind of a tiny swing, so it's very likely to go at least to the 1.618. It shot above that. Usually the 2.0 level, 90% of the time, is the maximum profit you're going to make on that move. Typically it'll retrace and maybe continue higher, but the 2.0 is usually a perfect place to maximize your profits, and you can see it only went about 3 pips over that. So anytime it hits the 2.0 level, I'm typically out. Now, let's take a look at some of the other currencies at the time. The yen also became weak, and we already know the Australian was one of the strongest, so you could have also bought the Australian yen around 11 o'clock. And notice this one also just pretty much broke out of its high of the day, and it went up from 45 all the way, pretty much, it's a few pips away from 99. It's a 55 pip move in the next, when it goes up another 3 pips. But even if you got out of it somewhere around here at 80, you made 35 pips. So like I said, when one currency is strong, the other one's weak, typically you're going to make 25, 50 pips. Here's the Swiss. Notice, when you spot the lows and it can't break them, that's a pretty high probability place to go long when it starts to go back up. If it can't go below a certain price level and it touches it 2 or 3 times, the double bottom would have been another nice one here at 10. Also at 12, it's likely to go up. We already know that the dollar and the yen were weak, so you could look for dollar Swiss, and you can see this is a decent place to sell. Decent place to sell, and so forth. And basically, and that's it in a nutshell on how to use this tool to find the strongest currencies to buy versus the weakest ones to sell. Let's take a look at the Swiss yen. Strong Swiss, weak yen, and it doesn't take a rocket scientist. Again, notice what I said before. When one currency is strong, the other one weak, typically you're going to make 25 to 50 pips. This one went from slightly below 30 up to 60. It's 30 pips. Or if you got out here, like I said before, 25 pips in a very short amount of time. Let's look at some other currencies here. The euro, breakout from below to above the previous day's high at between 2 to 3. And not all currencies are going to continue, but this one did try to continue up for the next hour. From 2 to 3, this one's just kind of going sideways. So you could have, from 2 to 3, looked for Euro-Yen buys. Here's 2 to 3 in this one. About that breakout. Your initial stop would have been underneath the swing low here. And you can see it, it kind of went up a little bit. You might have lost 5-6 pips on this. But when trades don't work, you have very, very tiny losses. Let's take a look at the euro later in the day. Notice when it came down to the previous day's low, had a false breakout here. Maybe you went short, you lost 5 or 6 pips. When it came back into the previous day's range, you went long. We already know that the yen was weak. Right? Notice the time there, 12:31. Here's 12:30:01. This one's breaking out. And if you're in this trade and you see the euro just keep going and going, you stick with it. It's that simple. It doesn't take a rocket scientist. The euro is going up and it's continuing to go up. The yen is going down. It's continuing to go down. This one went from 10 all the way to 64. 54 pip move. And again, you can also, I don't typically use 5-minute charts. I'm just using this for illustrative purposes, but you can go to a 5-hour chart or 3 or 4 pips per bar. This will show you much more detail. And a lot of times you can spot anytime there's up, down pattern like this. That's typically a good trade. This one only went up about 8 pips. You got a nice little pullback right here that went up 15 pips. And with range charts, you can adjust each one based on its volatility. If a currency moves 100 pips per day or more, you might want to use a 5 pips per bar. If something only moves 60 pips per day, you might want to put a 3R on there. And that way you can adjust it based on its volatility. And when you get a breakouts like this and it goes up, you can put it underneath the previous bar. Typically, at that point, you're only risking 2 to 4 pips. It comes up, pulls back again, you move your stop up. And a lot of times, you can really spot perfect fib levels on here. And put the low on here, perfect, there we go. It came real close to the 1.382. That's a pretty decent place to get out. Draw your stop, you put it underneath the previous bar, the 2 bars back low, and that way you don't give back much pips. So that's how you use our currency indexes. And tomorrow I'll go over our new perfect oscillator, which really helps you almost to the pip time perfect entries and exits.